Good afternoon, and thank you for having me. In this short prelude, I won't really be discussing the future of the silver price because I will leave that to people who are smarter than I am and to people who are better in drawing lines on charts. If there's one thing we've learned in the past decade or so, it's virtually impossible to estimate the behavior of the precious metals prices. But what I would like to do is briefly discuss the fundamentals of the silver market, as those obviously do play an important role. I think that the supply-demand ratio will very likely be more important than anything else going forward, and I will explain why silver should be seen as an industrial metal rather than a precious metal. So the silver market has been in a physical deficit for several years in the past few years, and last year, for instance, the total silver supply came in at about 1.02 billion ounces versus a total demand of 992 million ounces. So technically, you would think that that's a slight oversupply of the market, and that's correct. But we need to take into consideration that about 170 million ounces of the 1.02 billion ounces of the supply actually came from recycling activities, and the pure mine production dropped to less than 840 million ounces. This means that this year, 2020, will very likely be the fifth consecutive year with a lower primary output from silver mines, but we do expect the supply from scrap metals to remain stable. And connecting to this, although a lot of people like to point at the decreasing mine production as the main reason for the silver price to move up, to go up, we also shouldn't forget about the demand side as well, because I think that that'll play a more important role than the supply side. More than anything else, the silver demand predominantly comes from industrial activities, which last year accounted for about 50%, just over 50%, say 52% of the demand. Throw in the additional demand from photography and jewelry, and about 75% of the world's silver demand comes from these three sectors, so to speak. Silver for investment is a whole different thing. Yes, we saw the demand for silver for investment purposes pick up last year, and given how much more attention there is for precious metals in the current year, we can actually expect the demand from the investment sector to continue to pick up this year. But again, we need to look at the bigger picture, because even if you would take the increases of this year and last year into consideration, it's actually less than 20% of the demand that's related to investment purposes, which is one of the main reasons why I think we should look at silver as an industrial metal rather than a precious metal. So that also means that the silver bulls, which continue to call silver the poor man's gold, it's an interesting concept, but I do not underwrite this thesis, because I'd be more inclined to give more attention to silver vis-a-vis the industrial performance of the world economies rather than seeing it as a poor man's gold. In a previous presentation I think it was in January, I mentioned I was a believer in higher silver prices, but I also said that I was unable to guesstimate as to when the silver price would break out and what levels it would reach. Well, happened much faster than I expected, because as we all know, in the past 9 months, we indeed did see the silver price reach multi-year highs. But this is perhaps also a bit counterintuitive as well, considering 2020 will be a bad year for the industrial output. And we can actually expect, well, reasonably expect the demand for silver for industrial purposes to decrease by, well, I would say a low double-digit percentage. So let's say 10–15%. Well, it all depends on the economic activity picking up in the third quarter and the fourth quarter, of course. So the main question is whether or not this will be compensated for by higher demand for investment purposes. And I think only time will tell, but I would expect that the difference between supply and demand will remain quite stable, mainly because we also saw lower supply with certain mines in, for instance, Mexico shutting down due to the COVID-19 crisis. So just for the record here, I mean, this doesn't mean I'm bearish on silver, as the main challenge for the metal in the next decade will be to keep the primary mine output at a sufficiently high level just to ensure there's no sudden supply deficit. And while silver exploration activities have been reduced in the past 5, 6, 7 years, ever since silver went on a decline, the higher silver price in the past few months is actually the main driver for increased exploration expenditures focusing on this specific metal. And with the current silver price of around $22, $23 per ounce, or whatever it's trading at today, projects that were actually gathering dust on the shelves because they wouldn't work at a $15 silver price will now actually become viable again. So we'll see quite a few of those swing projects, I guess we can call them, that wouldn't be viable at 15 or 16 silver, but would be viable at 21, 22, $23 silver. So I always try to limit the risks when I look at stories or when I look at silver projects. And I'm very interested in stories where there is some sort of natural hedge. So either in the form of projects being a polymetallic project, where you have a myriad of other metals which help to reduce the dependence on silver, or having projects with a more pure precious metals component, where, for instance, gold-silver mineralization is being targeted. So as I mentioned before, silver should be seen as a sort of industrial metal, and I'm not buying into the poor man's gold thesis, but I do acknowledge that gold will definitely continue to act as some sort of stabilizer and safe haven for nervous investors and nervous hands. Sure, these two options aren't and will not be the perfect solution, right? Because even though you reduce your dependence on silver and deal with the higher volatility, it's not a given that the gold price or the base metals prices will continue to remain stable or at an elevated level. So I do think that having other metals in the ground, be it base metals or be it precious metals, could reduce the risk for a company as a whole. So I'm definitely not arguing against silver as a metal, but there's more to silver than just considering it some sort of precious metal. And given the demand, the majority of the demand is actually coming from the industrial purposes, I think that the gold-silver ratio may be less relevant than you would think. We need to look at the economic outputs of countries rather than focusing on historical ratios. If you would apply this thesis and look at the markets right now, and you look at the future markets on the silver, you can actually see that there still is quite a bit of optimism for the silver price for the next 12 to 24 months. If you look at the silver futures for, let's say, delivery in December 2021, so about 15 months from now, we see that silver for delivery in that month is trading at $24.50 per ounce. So that's about $1 per ounce higher than the spot price. So it clearly indicates that the futures markets still see quite a bit of upside potential in the silver price. And at 24.5, I mean, let's be clear, it's a level that will be very much welcomed by any silver producer and aspiring producers, as any silver-focused company that's unable to generate a positive operating and free cash flow, because free cash flow is obviously more important. So anyone who's unable to make a profit or make free cash flow at 24.5 silver should start wondering if they're in the right sector. So 24 silver, yeah, it's a price level that I think most producers and future producers should be happy to see on the markets. So the essential takeaway here is that silver mining companies are price takers, and silver prices will not be determined by the flight towards a safe haven like gold, but more by the level of economic activity around the world. And of course, the primary supply, so the silver production from silver mines, will remain a big factor, which will determine whether or not we'll see a supply crunch. And the bottom line is, even if your economy contracts and remains contracted for the next 2 or 3 years, the world will still have to invest in new silver mines to ensure the depletion of the current producing mines can be compensated for. Old mines will simply have to be replaced by new mines, and given the lack of investment in new silver resources, exploration, and silver mines in general for the past 5, 6, 7 years, the renewed focus on the metal these days, thanks to the higher silver price, will help. And given the volatility of the silver price these days, well, if we look at the chart over the past 3, 4, 5 months, or even on a year-to-date chart, and the growing list of what you would call, diplomatically speaking, untrustworthy jurisdictions, I think we can reasonably expect the higher grade operations and tier 1 mining jurisdictions to become more popular in the quest to find more silver resources. Thanks for having me.